the VA limit for your area. And for the most of the people that are listening, that's 417,000. You can go above that. The veteran would just, whatever is above $417,000, the veteran would pay 25% of that overage. So here's a good example. If 417,000 is your lending limit in your geographic area and you want to buy a house that's $517,000, that's $100,000 in overage. The veteran would pay $25,000 or 25% of that overage. So,
and the VA answers the other 75% of the overage?
That's exactly right.
Ding! Didn't know that either.
Yeah, absolutely.
Very interesting.
Yeah, I financed a house 2 months ago for a veteran. It was $720,000. Yeah, so he paid the overage and he was very happy.
Wow.
Yeah.
All sorts of great little secrets here. Now, we know that on most conventional types of loans that there is PMI or private mortgage insurance. Do you have that on a VA loan?
Never on a VA loan. The VA does not believe in charging the veteran on a monthly basis of PMI or private mortgage insurance. However, they do charge a one-time funding fee up front on a VA loan. The very first time that a veteran uses his eligibility, his or her eligibility to purchase a home, the VA charges 2.15% as a VA funding fee. Now, they do that in lieu of requiring a down payment or in lieu of having any PMI on the loan.
And you just said something that's key. That's only the first time they use their eligibility.
That's correct. Then they charge a 3.3% funding fee. The VA allows the lender and the veteran to put that funding fee on top of the loan, so you don't have to pay it. Here's a good example. First time usage, you're buying a house for $100,000. The actual loan amount will be $102,150.
Yes, I understand.
Yeah, that's how that works. And I get the
question. So you pay the funding fee, but you finance it for you.
Absolutely. Now, there is one way around that, and we're going to talk about that a little bit later when we get into disability.
Okay, very good. By the way, if you're considering a VA loan, you want to know how you can get more information about that, our number's right at the bottom of the screen. You can just give us a call there.
Yeah, so give us a call right now. It doesn't cost a penny to talk, and we'll be happy to answer all of your questions.
All right, well, let's move on to the next of the top 10 questions that we have here. Okay, now here's something you just alluded to a moment ago. So let's say I've got a VA disability. I was injured. Does this actually help me with a VA loan?
Absolutely. If the VA rates you 10% or more disabled, or some people call it service-connected disability, then the VA waives that entire funding fee.
The whole thing?
The whole thing. It is absolutely waived.
Wow.
Yeah, that's a huge savings.
Yeah, then the interest over the long haul, I mean, that can really add up.
Oh, it's huge. And here's the other thing. In today's world of the military, 70% of all veterans are awarded a disability of 10% or more.
70%?
Absolutely. So the majority of veterans today that are seeking a VA loan do have a disability of at least 10%. In the old days, you had to ask for it. You had to step up and say, I need to get evaluated. Today, they're going to do it whether you want or not. They're going to give everybody a physical before they leave and offer this physical to determine that.
Okay, so yeah. So the default is that you will get it.
Oh, absolutely.
Okay.
Absolutely.
Boy, that's a great thing to know.
Plus, on top of that, the VA disability gets you a tax-free check every single month from the military for the rest of your life.
Right.
Yeah.
Okay, well, not that we want to be disabled,
that's exactly
but if we are,
right.
there's obvious benefits now that come along with that.
Tremendous benefits when it comes to the VA mortgage.
Okay, so, this is an interesting time in the economy, and so this is a very common thing that we see here. Somebody says, look, I once lost my home to a VA foreclosure. Am I done? Do they write me off, or can I use my VA eligibility again?
That's a great question, and one that comes in a lot. The answer is you can use your VA eligibility again. Here's how the VA looks at that, and the VA has a big heart, by the way. They're going to look at that and say, okay, we lost X number of dollars on that home, and they never forget. So they're going to look back in their records. They're going to say we lost X number of dollars on that home, and they're going to subtract that from the VA eligibility that the veteran has, and they will allow him to then purchase another home.
Okay, so let's put this like some real numbers on this.
Yeah.
So somebody had a $250,000 house. Market got loopy, and the VA lost $50,000.
Mm-hmm.
They took the house back. They foreclosed. They got the house. They sold it for $200,000.
Mm-hmm.
And $250,000 was owed, so there's a $50,000 shortfall.
Mm-hmm.
So if the veteran now would come along and say, hey, my VA eligibility is whatever the number is, $200,000.
Mm-hmm.
VA says, "Well, lend you more money, but we're going to deduct the 50 that we got beat on before. So now your eligibility is $150,000."
Yeah, there's a way that they calculate that, but basically, yes, whatever they lost, using the formula that they use, they're going to deduct that, and they will allow the veteran to do it all over again to buy another home.
Wow, very, very good to know.
Uh-huh. You know, here's something to remember. On all veteran loans that were written prior to 1988, they were assumable by anybody without qualification.
I remember that.
And so, as a result of that, a lot of veterans didn't understand when they allowed somebody to take over their payments, that was okay, but their eligibility was still tied to that home.
To that loan.
So if they allowed somebody else to take over the payments in that home and went through a closing, they thought they were released from that, but they were released from the loan, but not the responsibility and their eligibility. And
Wow.
so a lot of homes were foreclosed and the veteran didn't even know it.
Right. Okay. So, and they changed that in 1988. They were
Right.
no longer non-qualifying assumables.
That's exactly right.
Okay.
Now a veteran can allow another veteran to take over his VA loan, but today not without a written release of liability from the VA and a release and an approval by his current lender.
Okay, well, look at this one here. Suppose that I want to buy a multi-family property. Can I use the VA eligibility for this, or is that for single-family properties only?
Absolutely. You can use your VA to buy up to a fourplex, but here's the tip. The veteran must move into one of those units.
Okay.
You have to occupy.
It's owner-occupied.
Absolutely.
At least one of the units.
Yep.
Okay.
That's exactly right.
And otherwise, they treat it exactly the same. The process is the same in terms of appraisal, anything else.
Absolutely the same.
It's just not an investment, quote, an investment property.
That's
Okay.
exactly right. That the tip is that you have to live in it.
Okay. All right, well, look at this one. My fiance and I want to buy our first home using my VA. So we're not married, but we want to use the VA for our first home together. Is this okay?
No, it's not. The VA is very strict on that. The only additional person that can be on a VA loan, other than the veteran or the active service member, is a spouse. The only way around that would be another person with military benefits. In other words, two people
Two
that
veterans.
are both veterans.
They each have a VA eligibility.
That's correct. That question comes up a lot now with a lot of soldiers returning from Iraq and Afghanistan. They're ready to get married and buy that house, but the VA will not allow a person that is not married on that loan.
Okay, well, I'm sure by now you're probably thinking of some questions you might want to ask that would pertain to your own VA situation. So our number is right at the bottom of the screen. Just give us a jingle. We'll help you out.
Yeah, it doesn't cost a penny to talk, so give us a call right now. We'll be happy to answer all of your questions.
Okay, our next question here. I've had a bankruptcy. This is obviously a very common thing that comes up these days in this environment. So I had a bankruptcy. Can I still use my VA eligibility?
Great question. There are two different kinds of bankruptcy. A Chapter 7 bankruptcy, which most people know is a complete liquidation where the judge, with a stroke of a pen, wiped out all the debts of the person. The VA still has a heart in that regard, but they make you wait 2 years before you can get another mortgage of any type.
Okay, so it needs to be discharged for 2 years,
Correct.
and then you can get another VA loan.
Correct. But now here's a tip for you. Most people today are taking what's called Chapter 13, which is the reorganization loan. Most people don't realize this, but once you're just 12 months into the Chapter 13, you don't have to finish it. When you're 12 months into the bankruptcy, if you can get permission from the court, and if you can get a printout from the court that shows all your payments were made on time, the VA will allow us to do a home loan for you while you're in bankruptcy.
No kidding.
Absolutely.
All right, there's another real little piece of buried treasure in this
Yep.
conversation.
As a VA tidbit.
Yes.
Yeah.
Okay. Maybe I don't want to buy a house right now, but I want to get some land and build a house later. Can I use my VA to buy that raw land?
No, you cannot. The VA is used specifically to buy your primary residence. It has to be a home ready for you to move into. Now, a home meaning a stick-built home, as we call it in the industry, or it can be a manufactured home, but it has to be your primary residence that is ready for you to move into. They do not allow raw land.
Okay. And again, don't confuse primary residence with single family home because as we spoke about before, it could be anywhere from 1 to 4 units as long as you're living in one of the units.
That's exactly right.
Okay.
The VA loan is designed only for the veteran to move into that home as their primary residence.
Okay, now I know this was the top 10 questions asked about VA loans, but we've had a couple bonus questions that came in, and I frankly I like the top 10 title. So